There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome to the Trading Justice Podcast. Hope you enjoyed part one of the Forex podcast we just did in terms of understanding what the Forex market is, why we trade it, all the definitions of it. In part two of it, we're going to talk about the foreign currency cycle, how we trade it, news-based trades, bank open trades, go-to-bed trades, and the like. So obviously sit back, enjoy the ride, and get out there, start trading Forex, get in the game, start making money one trade at a time. All right, everybody, let's continue the discussion here on the foreign currency cycle. I want to do one quick swing trade in terms of, looking at the euro dollar right now, assessing where it's going to go, using our understanding of technical analysis, some of the tools as well, and then we're going to get into the foreign currency cycle. Now, once again, the euro dollar is in a tremendous downtrend with, and quite frankly, guys, it doesn't take a lot of rocket science here. The Europeans through the ECB are now doing quantitative easing, which basically means they are printing money to put into the marketplace. When they print money and put into the marketplace, it increases the supply of euros in the market, which will therefore drive the euro down. At the same time, the Americans are now getting out of the quantitative easing business, so they're reducing the value of the supply of the money in the market, thus increasing the value of the dollar. Hence, otherwise, the euro is going down against the dollar. Yes, Susie, mine's just customized. You just have to do the same thing. Okay, so in this downtrend here, you have waves. The same way you have waves in everything else. Remember our motive wave down, corrective wave up, motive wave down, corrective wave up. So that's all we have here. We have a motive wave down, corrective wave up. Motive wave down, corrective wave up. Now, in terms of that, let me kind of walk you through prepping a trade. Now, whenever we prep a trade, we need to know three things on that trade, correct? What are they? We have to know our entry price, we have to know our target price, and we have to know our stop loss price. Now, has the currency already confirmed back down? Okay, how's the audio, guys? Everybody good on the audio? Awesome. I've only been talking for two minutes. I think I was talking for literally 2 minutes before somebody said something. So, anyways, all we're doing here, guys, let me hurry and do a recap, okay? All we're doing is we're just doing technical analysis here. Remember, motive wave down, corrective wave up, motive wave down, corrective wave up, and we are in a pattern where we're going to do what? Are we going to sell the euro or are we going to buy the euro? Yeah, we're going to sell the euro, exactly, which means we're automatically going to buy the dollar. Well, in that, have we already confirmed coming back down? Have we already confirmed? Yes, we have already confirmed going back down, and to add that box, it's called one-click trading. Just right-click on the chart, one-click trading, right-click on the chart, one-click trading. Okay, so I'm just going to enter a current market value. Okay, current market value is 1.0915. Now, in that currency quote, again, 1.0915, so that's $1.09 and 15 pips. It is the 5 that is the pip. We have a standard lot, which means the pip value is $10. Now, in terms of that, remember back to potential average yield. Potential average yield is the average price cycle between two movements. So my first movement is here to here. That is 1,350 pips. 1,350 pips. My second price movement is here to here. That is 1,000 pips. Okay, if you average those two out, 1,000 plus 1,350, you're really talking about 2,350 or 1,175. So the average movement in this currency is 1,175 pips. Does everybody understand? Good. So here is your resistance zone right here. It's right at 110. Okay, 110. So where should the market go? Where should the market go? It's $1.10. By the way, each cent is 100 pips. So where should, well, it's going to go down, but to where? The average movement is 1,175. Okay, no, it's not going up. Where's it going? Okay, think about this, guys. You're making it way too complicated. You literally are. You're way too complicated. It's not that complicated. This movement here is 13 cents. This movement here is 11 cents. What's the average? 12 cents. So if it's at $1.10 right now, where does it go? It goes to 98 cents. Okay? So when you put it like that, it makes it makes it easy, right? Okay? The only reason if you see, okay, so what is 13 plus 2 zeros? What is 13 plus 2 zeros? It's 1,300. Okay, so when I say 1,300 pips, all that is 13 cents. When I say 1,100 pips, all that is 11 cents. That's all it is. Does that make sense, everybody? Do you see why I said that you were making this too complicated? It's just a new language, guys. The only reason it's confusing is because it's a new language. It's actually, when you talk about 11 cents and 13 cents and the average between 11 cents and 13 cents, isn't that a lot easier than doing potential average yield on, say, a stock? Yeah, that's why I said the currency market is actually easier than the stock and options market. It's more about the terminology. That's all it's about, okay? And believe me, guys, it took me time too, all right? So let's just, instead of saying pips tonight, how about we just say cents? And all that cent means is 100 pips. That's all it means, okay? So if we short it at $1.09 and it goes down to 98 cents, okay, we are going to make 1,100 pips. Now on a standard lot, which with every pip being $10, how much money would we make on that trade? $11,000. You have to add a zero. Okay, we put in 2,000, we make 11,000. How's that sound, guys? Yeah, that's why I love currencies. So now I can initiate the transaction simply by hitting the sell order. I can right-click on the chart, go down to sell, okay, or so I'm just going to put sell, and then I'm going to right-click. I'm going to go to modify. So all I did is click sell, okay. Then I right-click on the actual euro dollar down here. And I go to modify, all right? So now I'm going to put a stop loss at $1.11, and I'm going to take profit at 98 cents. And I put those two orders in the market. I have my target set. I have my stop loss set. And when I'm ready to adjust the stop loss, look how easy this is. So let's say our stop loss was up here initially. All I need to do is left click, drag it. That's it, and I can adjust my stop loss. So as the currency goes down, I just need to drag my stop loss down with it. That's awesome. And again, isn't that easier than anything we've already been talking about in terms of equities and options and so don't make this market too confusing. It's not that confusing of a market when you actually break it down to the simplicity. Well, it's just a different market, Max. That's really all it is. It's just a different market. Controlling stop losses is a left click in think or swim, so that's very similar. It's a 24-hour market. I mean, if you're trading in the stock and the options market right now, those markets aren't open up. And so you can't place orders like this when the market's not open up because you're not controlling your risk. And that's why when I kept talking about the 24-hour cycle, that's one of the reasons why the 24-hour cycle is so important. So let's do another trade. Okay, let's look at the pound dollar here. All right, now the pound dollar here is in what trend? What is the pound dollar in? What's the pound dollar in? Yeah, it's going down too. It's going down too. Okay, now in terms of this, is it in a position right now, this movement here, it's retraced back up and has it already confirmed going back down? Has it already confirmed going back down? Okay, good. So let me walk you through some numbers here. Resistance right here is $1.50. $1.50. Okay, $1.50. All right, the average movement is 75 cents and 85 cents. What is the average of 75 and 85 cents? Or excuse me, 7.5 cents and 8.5 cents. Okay, so 8 cents. Okay, 8 cents. All right. So here, 80 cents on the would be an amazing trade. 8 cents. So it formed resistance here at $1.50. Okay, where is the currency going to go in the future? No, 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 no. Everybody knows down. Where is it going in the future? Average price movement is 8 cents. Resistance is $1.50. It's going down to $1.42. So if I sell it at $1.48, okay, if I sell it at $1.48.50 and I buy it back at $1.42, I'm going to make 6.5 cents. 6.5 cents, which is how many pips? It's 650. Everybody say 650. Okay, good. So on a standard lot, we're going to sell. Okay. We're now going to go to the pound and right click and modify. We're going to put a stop loss above the candle high at $1.50. We're going to lock in profit at $1.42. And we're going to modify that. And we now have a working order. Boom. So if it goes down to $1.42, we're going to make $6,500, ladies and gentlemen. How's that sound? Okay. Now on a mini lot, we'll just make $650. Is that still good though on a mini lot? Yeah, absolutely. It's a 300% ROI, ladies and gentlemen. That's a PS4. I agree, Susie. That is a PS4. I had to buy one for my son. Okay. All right. Let's go ahead and let's look at another one here. Let's look at the dollar yen pair. Dollar yen pair. All right. So the dollar yen is in what trend on the short-term trend? Dollar yen. It's up. Okay. The short-term trend is up. The intermediate trend is neutral. Okay, short-term trend up, intermediate trend neutral. Short-term trend, that is basically 430 pips or 4.3 cents. And this one is 300. So the average of 450 and 300, what is that? The average of 400 and 300. It's 300 and 450, excuse me. The average of 300 and 450 is 375. Okay, that's forming right here at $1.20. So at $1, it's actually 120. If it goes up 375, it's going to go up to 123.75. Okay, so if you know that, buy. Then right click, modify your order, put a stop loss underneath 120 at 119. Take profit at 123.50 or 75 and modify. Done. Now, we can do that over and over and over again. Over and over and over again. Do you see why I love doing my Forex report every week, guys? Okay. And do you see why I switched from TOS to MetaTrader 4? It's just simpler. Everything's just a click of a button, okay? And it's really not that complicated of a platform to learn, okay? You just got to play around with it. No, it's free. It's a free software, Susie and Patrick. I focus swing trades on dailies, Carlos, and we're going to do intraday trading, and I focus on 5 and 15-minute charts. So I just click at the 15-minute chart there. Now it's a 15-minute chart, 5-minute chart there. 1 hour chart there, so on and so forth. All right, let's go back into the PowerPoint here. Let's look at that. Okay. Now let's talk about the cycle in the marketplace itself. Okay. The cycle in the marketplace is based on the 24-hour cycle. It's basically how I day trade currencies is based on this 24-hour cycle. Now, the 24-hour cycle, we'll talk about kind of how it processes whatnot here in just a little bit. But for right now, you have 3 basic things you need to focus on during the 24-hour cycle in the market. You have news-based trades, bank open trades, and banking out, which are conducted during the banking hours, and then you have non-banking hours when we typically do not do anything. Now, the Forex market again is a 24-hour market. It is not open 7 days a week. It is open Monday through Friday. It opens up Sunday night at 5 p.m. Eastern Standard Time. That is when the Sydney Bank opens up, thus meaning the Australian and New Zealand dollar opens up. Okay, it then continues on to 7 p.m. Eastern Standard Time with the Japanese yen and the Tokyo banks, the Bank of Japan opening up, and then you have the European banks open up at 3 a.m. Eastern Standard Time. Typically with the Bank of London and the London banks, and then you have, which impact the Swiss franc, the British pound, as well as the Swiss franc, or the euro, excuse me, and then you have the New York banks open up at 8 a.m. Eastern Standard Time. Now, brokers, meaning the brokers that conduct all of the Forex trades, they base all of their time based on Greenwich Standard Time, and that's what you'll see in MetaTrader as well. Most used London is basically Greenwich Standard Time, except when we have daylight savings time, it's -1. You do not have to worry about that right now. Just focus on the Eastern Standard Times. Now, a very good world clock for you guys, for you currency traders, is the worldtimezone.com. That's a very good one. You also have a pretty decent one at forexmarkethours.com. So you have two of them here, worldtimezone.com. You also have the forexmarkethours.com as well. And this is what you'll see here on the Forex Market Hours one. The New York banks are open up 8 a.m. to 5 p.m. Sydney is open up 5 p.m. to 2 a.m. Tokyo is open up 7 p.m. to 4 a.m. and London is open up 3 a.m. until noon Eastern Standard Time. Now, the Forex market banking hours are vitally important to understand because a currency will behave vastly different when a bank is open than when the bank is closed. So despite the fact that you can trade 24 hours a day, it doesn't mean that you trade that currency 24 hours a day. We would much rather trade when the bank is open than when the bank is closed because you have currency transactions going on into place. So for example, right now it is oh wow, what time is it? It's 9:23 Eastern Standard Time. Now right now, what time is it in London? It's 9:23 Eastern Standard Time, 9:25 Eastern Standard Time. What time is it in London? They're about what, 5 hours? About 5 hours, about somewhere around 2 in the morning, right? About 2 in the morning. 2:23 a.m. Thank you, Mila. Okay, now at 2:23 in the morning, what are the traders in London, which is the mecca of currency transactions? What are the traders doing? They're not prepping trades, they're sleeping. Okay? After the bank closed, they went to the pub. Okay? When they got done with the pub, they went home and passed out. Right now, they are sleeping, which basically means they are doing nothing. Which means the euro, the Swiss, the pound, what should they be doing right now? Nothing. Okay? Because, and again, it's not all the time, but they should be doing nothing because all of their banking hours are closed. For example, let's go ahead and look at it very quickly just to verify. So here we have the euro dollar. Okay? Let's look at just a 30-minute chart here. Okay? So this is when the bank was open, guys. What's happened since the bank closed? What's happened to all the price movement since the bank is closed? It's been doing nothing. It's been hanging out, literally doing nothing. So why would we be trading the euro dollar if we were day trading? When both of those two markets are closed. Does that make sense? Okay, well, what about the pound dollar? Pound dollar's kind of just been hanging out. Okay, let's look at a 15-minute chart. Just been hanging out. What about the Swiss franc dollar pair? Swiss franc just been hanging out. Look at the volatility when the market was open. Now it's just hanging out. Okay, and so those markets are not open, which means they're not going to be doing anything. Well, if you look at some of the other markets that are open, okay, you got the Australian dollar doing nothing. We're not going to do anything. You got the Australian Japanese market. That's really not doing anything. We're not going to do anything. And so nothing's really happening right now. Does that make sense, everybody? So if nothing's happening, okay, well, you do have two markets open, because what time is it in Australia right now? What time is it in Japan right now? Japan just opened up 2.5 hours ago. Australia's midday over there right now. So those markets are open. There's not a lot that's impacting the price action. So if nothing's really happening in any market right now, why would I sit in front of the computer and place trades? Does that make sense? If nothing's happening, then why hang out? Okay, so and you can really kind of understand when this is going to happen and when it's not going to happen. You know, for example, if I go to forexfactory.com and I look at all the economic calendar here, and we'll talk about this later. Let's put up all the major news. Okay, all the news for, well, just let's look at the Australian dollar and the Japanese yen news. Okay. How many economic reports do you see listed here, ladies and gentlemen? There's none. Which means the New York market is closed. The London market is closed. We're looking at the Japanese yen and Australian economic reports, but there's no economic reports coming out, which means nothing's happening today. Does that make sense? There was nothing out there to move the market. So if I know that, why would I even be in front of the market? Well, there's trading going on. It's just not a lot, Liz. Like, the banks aren't doing anything. The pros aren't doing anything. The funds aren't doing anything. There's just no information out there that really drive price action one way or the other, which means, as in almost every market we saw, every currency we looked at, they all were doing the exact same thing, which is absolutely nothing. Okay, and that's just based on the banking system. So let's go back into this real quick. All right, so the Forex market hours are as what they are. Again, New York 8 a.m. to 5, Sydney 5 p.m. to 2 a.m., Tokyo and London, Tokyo 7 p.m. to 4 a.m., and London 3 a.m. to noon. Now, I do like trading at night, guys. I do like trading the Japanese yen, I do like trading the Australian, and I do like trading the euro. However, if there's nothing out there to drive the market, should we waste our time? No. Do not force action, okay? So just go do something, okay? Just go to a movie, all right? Go cook dinner. Go have a glass of wine with your loved one. Whatever it is, live life. Nothing's happening in the currency market today. Now, the first thing I want to talk about is news-based events. News-based events are some of my favorite trading environments. Now, they're some of my favorite trading environments because they're so fast. They're so liquid. They literally just drive price action faster than you could possibly think. So if you're risk adverse, should you trade news-based trades right now? If you're scared of risk? No, but should you practice them? Should you always practice? Always practice. Yes, you can't lose real money in a demo account, guys. That's not possible. All right, you cannot lose money in a demo account. Let me say that again. All right, your news-based trades are based on economic reports. We just went to a website called forexfactory.com to identify if there's some economic reports that are coming out. You guys have been going to forexfactory.com, correct? Because that's part of our daily routine, correct? Awesome. Okay, now unemployment, FOMC event speeches, GDP, inflation, retail sales, consumer confidence, manufacturing. These are economic reports. Now, the economic reports will have two numbers listed. The first listed, and you can see it on your screen, it's the middle column right there. It says forecast. The forecast is what the entire market expects, which means that is already built into price action. The number that is not embedded into price action is what the actual number is. For example, on Thursday right here, On February 26th, on Thursday, you had the CPI report. It came out. The forecast was 0.6. It came in at less than that, at a negative 0.7. That will be built into price action. The preliminary GDP number, the expectation was 2.1. It came in at 2.2. That will be embedded in price action, and it's based on the actual number, which actually drives the market really fast one way or the other. So if the number that comes in is really similar to the number that was expected, we shouldn't see that much activity on that actual the actual currency pair. But if the number is increased or decreased, we're going to see movement one way or the other. Now, high frequency trading systems will dominate these types of trades. Okay. Now, high frequency trading systems are algorithm based trading. Are they fast or are they slow? Are they fast or slow? Oh, they're very fast, guys. They trade more in one fraction of 1 second than we will trade in our entire lifetime, ladies and gentlemen. No doubt. Do we want to get in front of them? Do we want to get in front of them? No. That's like asking to get hit by Mike Tyson. Okay? Do we want to get hit by Mike Tyson? No. Okay, that wouldn't feel very good. Okay? We would literally be ran over, no doubt, Al. All right? But if we prepare, we can take advantage of the movement. Now, I have something written up here on the screen. Success is not a random occurrence. Okay? That's not how success works. Success is a product of design. You guys have heard me say that before. It is preparation plus execution. That equals success. How do we prepare? We go to forexfactory.com. We identify when the economic report comes out. We execute through the placement of orders. So what I like doing is I like to identify on a 5 and a 15-minute chart. What are the time frames, ladies and gentlemen? 5 and a 15-minute chart. Exactly. I want to identify on a 5 and a 15-minute chart. What you are seeing here is a 15-minute chart. Sometimes I'll even drop it down to a 1-minute chart, guys. But I typically 5 and a 15-minute chart. I want to identify the top of resistance and the bottom of support. Now, typically, not all the time, but typically the currency will kind of go in a very neutral environment prior to the economic report, because they are the same way as we are. They know this economic report is coming out. Nobody wants to get in front of the economic news, so they're just going to sit back and say, you know what, let's wait, let's hang out, let's just wait for those high frequency traders to do what they do. So we have the GDP report coming out. We identify support resistance on a 5-15-minute chart, and then we place orders. We place a buy stop order above resistance, a sell stop order below support. I'm gonna place about a 10 to 20 pips stop loss. A lot of times you already have a stop loss based on the order, so don't worry about that right now. Now the target on this, okay, the target on this is based on the price movement. So do you have to be in front of the market to make this trade? Yes. Yes. Guys, you cannot walk away from a news-based trade. It's 45, it's an hour, it's 2 hours, but you cannot walk away from this trade. It's too fast, it's volatile. You can walk away from bank open trades. You can go to bed during the go-to-bed trade. You cannot walk away from a news-based trade. Okay? Can everybody agree to that? We will not walk away from a news-based trade. Okay, good. Now, because how we're going to target is when the report is built into the market. So above resistance, I place a buy stop price. So let's just say we're going to trade a mini lot here. Okay. So in MetaTrader 4, what is the variation? It's 0.1. Everybody put that into chat. 0.1. That is a mini lot. 0.1. Okay. So we're going to place a buy stop, a mini order, above resistance at 0.1. We're going to place a sell stop underneath support, once again 0.1. Okay, that's the mini lot. And then we're just going to wait to watch the movement unfold. And look at that price movement there. Look how fast that price movement is there. Okay, all of a sudden the market drives. And it drives fast. and it's volatile, and it's up and down, and it's crazy, and it's fun, because it's like being on a roller coaster. 150 pips in 3.5 hours. Okay, here's another one. Again, success is not a random occurrence. It is a product of design. It is preparation plus execution. All right, now what do we have? We have the European Central Bank. The European Central Bank announcing monetary policy. Okay, all of a sudden, look at a flat line. Can everybody see it kind of go neutral for a second? Everybody see that going neutral? Okay, we identify support and resistance. We place orders above and below support and resistance. Okay, we then buy stop, sell stop, boom, drives down price. Now, on the far right of the chart, do you now see it go neutral again? Does everybody see that? Okay, that means the new information is now built into price action, and that is a 212 pip movement in 2 hours, ladies and gentlemen. Here's another one. Success, not a random occurrence. It's a product of preparation and execution. This is the RBA bank rate. This is one I really like trading. Now, who's the RBA? Who can tell me who the RBA is? Obviously, they're one of the central banks. Who's the RBA? Yeah, it's the Australians. It's the Royal Bank of Australia. Okay, the Royal Bank of Australia. Once again, can you notice how it flatlines on price action, ladies and gentlemen? Can everybody see how it flatlines on price action? All right, 5-15-minute chart. Place your orders. Buy stop above resistance. Sell stop below support. And watch the magic work. Boom. That is a 190 pip movement in 1 hour. The reason I like trading the Australian monetary policy, it comes out at 8 o'clock my time, which is 10 o'clock Eastern. That is Eastern PM, 8 o'clock PM. Here's another one. This is the granddaddy of them all. And it's not the Rose Bowl, ladies and gentlemen. It is the FOMC, the Free Open Market Committee. Who is the Free Open Market Committee? Whose central bank is that one? That's the Fed. That's United States Central Bank, the number one bank. Look at a flat line. Buy stop above resistance, sell stop below support, and look at that price movement. Look at the action fly. Ladies and gentlemen, that was last week. 250 pips in the first 2 hours, another 250 pips in the next 2 hours. There was over a 400 to 500 pip movement in 4 hours, ladies and gentlemen. And honestly speaking, when you're looking at this, how difficult does this trade seem? Step one, identify the economic report. Step two, a couple minutes before the report comes out, place a buy stop above resistance, a sell stop below support on the 5-15-minute chart. Step three, watch the fireworks. And it doesn't always work out, guys. That's not how everything does. It doesn't always work out, okay? It works out over time, all right? But it is a great trade. It's an absolute great trade. Sure I will, okay? Questions on this, okay? Yes, Liz, you can get out whenever you want. Ruli, how do you find a target on such a big... Ruli, what did I say the target was? The target is not a number. What did I say the target was? The target is the visual identification of the price chart. Okay, so look at the price movement here, 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 here. But do you see the double top right there, everybody? Yeah, that's priced in. It's priced in. That's really the thing. And you certainly can, because this sell stop here, that is acting as a stop loss. And so you can actually trail that up as it goes up. So underneath that candle, that candle, that candle, that candle. So when it comes back down, you get stopped out at a gain as well. You can definitely do that. News-based trades are trades I absolutely love making. They're some of my favorite trades in the entire marketplace. You know, there's not as many as you think on a weekly basis. There's really not that many right now. But let's just hypothetically say on the euro dollar here. Okay, let's hypothetically say that there is there's an economic report that is literally like 2 minutes from now. Okay, so can everybody play the pretend game for me? Is that okay? Can everybody play the pretend game? Okay, so the pretend game is this. In 5 minutes, the GDP number is going to come out. That's gross domestic product. By the way, it comes out on this Friday. So what I'm going to do is I'm going to place an order above resistance. We're going to do a buy stop. Okay, see my order? It's placed right there. I'm then going to place another order, right click, and I'm going to place a sell stop under support. Do you see how I now have my orders bracketed? One above resistance and another one below support. Does everybody see that? Okay, so now do I care which way it goes? No. So that's how you do it. It's actually a very, very simple process on the trade. What I would suggest, guys, is before you live trade that, market prices, listen, but it's based on a buy stop, which is at or above, or a sell stop at or below. But it is market prices, and I would suggest you virtual trade at least, I would say at least 10 to 20 of these before you get out there and you do it. You do it for even on a mini or a micro. You just really want to understand the price movement. What a buy stop means is you're placing an order at or above. So coming back on this policy statement, you see where my green line is? Okay, what that says is my buy stop right there. That says I'm not willing to buy this currency unless it goes above my green line. Okay, thanks, Al. I cannot believe you're on the plane. It's kind of flat out awesome. Flat out awesome. Okay, so that's what the buy stop is. It's just at or above. It's like, for example, let's say a buy stop limit. We just don't have the limit. Everybody knows what a buy stop limit is. We just don't have the limit on it. A buy stop just means at or above. I don't have to add the limit price because am I worried about a gap, everybody? No, I'm not worried about a gap, so I don't have to worry about that. Okay, now let's talk about the bank open trade. You have 4 bank opens in the world. You have the New York's at 8, Sydney at 5 Eastern, Tokyo at 7 Eastern, and London at 3 Eastern. Now, I want you to study this chart for 3 or 4 minutes. I just want you to study the chart. And on this 3 to 4 minute activity, I want you to identify what open and rate them. Okay? And I only did the U.S., the Japanese, and the British pound. What open is the most powerful? Okay, look at the price movement. So compare the U.S. to the yen to the pound. What open has the most powerful movements in it? Rank them 1 to 2 to 3. Okay, look at all of them. I'm going to give you 3 to 4 minutes. All right, ladies and gentlemen, let's see. Definitely U.S. dollar. Can we all agree that U.S. dollar is the number 1 open of the world? Yep, U.S. dollar. The number 2 open, I would and it varies. I mean, you got the yen here, got good movement there. British pound, good movement there. No movement there on the pound. No movement there on the yen. British pound, I would probably say the British pound open is second, with the yen closely being a third. And that just makes sense given the fact that, you know, the dollar is the number 1 currency of the world, the euro is the number 2 currency of the world, and and also has the pound there too, and then the yen is the number 3 currency of the world. But on the open, do you see the significance of the actual open? Yeah, the open is very, very important in terms of the price movement. And in all of this, I mean, once it opened up, it has a tendency to continue moving in the same direction. Because a lot of times, not every time, but a lot of times the open is based on some type of news event, some type of economic report that came out and is driving the marketplace. And so when that happens, the market has a tendency to continue to move in the direction of the open. Now, this is a trade called the bank open trade. I really like the bank open trade because it basically is is a way that we can just easily identify the price movement at the open and then place a trade, put a stop loss in, and walk away from it. We do not have to sit there. You do not have to sit there and watch it, okay? Just based on the opening price. Now, the go-to-bed trade is based on the bank open, okay? But it's based on a bank open that's happening before we go to bed. So, how many of you are from the Central or the Eastern time zone? Central or Eastern time zone. Okay. Your go-to-bed trade will either be on it probably will be on the yen. Okay. So everybody Central or East Coast say yen. Okay. Now, how many of you are from Mountain or Pacific Standard Time? Okay. Your go-to-bed trade will either be on the yen or on the euro or on the pound. Okay, so it's going to be on one of those, all right, because you're going to place the trade based on the bank open, and then what are you going to do? You're going to bed. Okay, so if you're an early to bed, okay, if you're early to bed, you're going to want to do the yen. If you're a night owl, you're going to do the euro or the yen. Okay, everybody good with that? New York's probably the yen, Liz. Probably the yen. All right, we'll talk about that here in a second. Now, you have 4 major bank opens. You have the U.S., you have London, Tokyo, and Japan. The U.S. Bank Open is the #1 open in the world. This is a current price action of today, by the way. The U.S. Bank Open opens up at 8 a.m. It's the #1 open in the world because it's the U.S. dollar, which accounts for about 85% of the overall transactions in the currency market. The U.S. dollar opens up at 8 a.m. You see the price movement start to come down, and it continues to carry through the rest of the day. And we saw about 120 pip moves in the first 3 hours of the trading day. Here's the Australian dollar. The Australian dollar opens up at 5 p.m. Eastern Standard Time. You can trade the Australian dollar against either the dollar, the yen, or the euro. You can do it against any one of those. Again, you can trade the Australian against the yen, the euro, or the US dollar. You wait to see the price movement. It breaks out. And then obviously you have a very consistent, this is from a couple days ago, that's the Australian dollar and Japanese yen pair, which means the Australian dollar was going up in relationship to the yen. And I do like the Australian dollar in relationship to the yen because the simple reality of I would rather have a commodity-backed currency than a fiat currency that they are trying to destroy. That is the Australian dollar bank open. Here's the Japanese bank open. The Japanese bank open, you can trade against the Australian, you can trade against the euro, you can trade against the pound, you can trade against the US dollar. The Japanese market is the third largest market in the world. It is based largely on exporting. The bank opens up at 7 p.m. Eastern Standard Time, and as you see, the bank opens up. The bank opens, and then all of a sudden the currency starts going down, and look as the currency goes down for the remaining part of the day. And here is the Great British Pound. This bank open happens at 3 a.m. Eastern Standard Time. The euro will open up about an hour before then at 2 a.m. Eastern Standard Time. The London Bank is the #1 central location for all currency exchanges. It is not the #1 currency of the world, that is the US dollar. It is the #1 location for currency transactions. This bank open will impact both the euro, the Swiss, and the Great British Pound. So once again, the bank opens, you place a trade, you place a stop loss under support, as we did in the news-based trades, and voila. Now, the go-to-bed trade. The go-to-bed trade is one of my favorite trades in the entire world. I love the go-to-bed trade. My good friend and colleague Keith King taught me the go-to-bed trade when he literally told me I was not being very bright for exchanging money for my health, because I used to stay up and trade currencies. I used to stay up and trade the euro, trade the pound, and I wasn't getting a lot of sleep. And Keith told me, Matt, what's more valuable, your health or money? And that made a lot of sense to me, because health is obviously more important than money. And so basically I said, well, what should I do, Keith? He goes, well, do the same thing, just go to bed. Okay, hence I called this and named this the go to bed trade. Interesting point, Keith, about 6 months after I started teaching the go to bed trade, based on what Keith taught me, he had one of my students go up to him at a Rich Dad Symposium. And my student, who I taught the go-to-bed trade, walked up to Keith and said, "Oh, I got to meet Keith. Matt tells me all about the go-to-bed trade." And Keith did not know what she was talking about. He told me about her heart attack because he didn't know what she was talking about. And he couldn't understand for like 10 minutes in the conversation. And finally, he figured it out and sent me a nice little text message. I probably should have told him it was the go-to-bed trade. Anyways, we're going to identify support and resistance on the currency we're trading before we go to sleep. If you're on the East Coast, typically that's going to be the yen. If you're on the west side of the U.S., that's typically going to be on the yen or on the euro or the pound or something along those lines. My go-to-bed trade is typically conducted on the euro. So I'm going to look at support and resistance. I'm going to place an order as it gets broken down, as you can see right there. We're going to sell the euro on the breakdown. We're going to place a stop loss about 10 to 15 pips, okay, up in above that support level, okay, and then as you can see, it goes down, and right when the bank closes, look what happens, okay. That's what it's all about. Do you guys love currencies now? You know what? I absolutely love trading currencies. It's number one, it's fun. Number two, it's consistent. Number three, it's such a wonderful tradable instrument for so many capacities, whether it's the leverage or the time or the strategies that we trade in the currency market. Regardless of what the reason for us trading currencies are a part of our lives. Currencies are part of all the systems that we trade in. The currencies are part of our investments. We have to understand currencies for every reason we talked about tonight, whether it's the long-term depreciation of the currency or whether it's just short-term trading and trying to generate more money. There's a lot of reasons why we trade currencies, but the number one reason why I trade currencies is because I truly do believe that our currency system is changing, ladies and gentlemen. I truly do believe that. I believe that the dollar will be replaced as the reserve currency of the world, and thus it's putting significant risk on every one of the value of everything we have. And we don't have to go down with that sinking ship, ladies and gentlemen.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.